Hello, this is Wes Bridle, and this is another Kingdom Calling Economic Update video. All these Economic Update videos are follow-ons to the Coming Storm presentation that we put on in November of 2009, where we talked about the enormous economic crisis that is coming to this country, really to the whole world, but particularly to the United States. And that's a really important message that you see. These are just updates of what's happened in the next 2 weeks. I'm going to shoot 4 here today on Memorial Day. Happy Memorial Day. And they'll give you an idea of the big news of the last couple weeks. But if you haven't seen that, you can see that for free by clicking the link right next to this video. And let's jump into it. I'm going to start with some good news. The Baltic Dry Index is up, which is a good economic indicator. It means that the cost of shipping goods around the world is more, which it means generally the economy is doing well. However, if you look deeper in that numbers, it's mostly the commodity carrying ships, so it's hard to read into exactly what that means. Financial reform, that's been in the news big time. The government has passed this huge reform regulation. Meredith Whitney, who is a big analyst for the banking sector, says investors should avoid banks at all costs because the Senate's reform bill is going to hurt them a lot. She said that $1.3 trillion is going to be sucked out of the financial system, which massively hurts our economy. And she said that European banks are actually even worse than the U.S. banks. So something to consider if you're invested there. Another thing to think about, the financial sector is 30% of the United States economy. If the government, and I realize this is a twisted situation because I'm not a fan of what Wall Street has been doing, but if the government is attacking Wall Street with new reforms and they're 30% of our economy, that's a bad thing for our entire economy. M3, which is a broad measure of money supply, it has dipped here recently. It is down significantly, the biggest drop since the Great Depression, since right before the Great Depression in 1929. And we also saw a dip in M3 right before the 2008 crash. So something to keep an eye on that's particularly a dangerous sign for our economy. And the world economy is shifting. China and Brazil are now selling more cars than the U.S., Europe, Japan. They're now the engine of the world economy. 60% of the world's exports now go to emerging markets. So whereas the United States, the big country, the big established industrial countries of the world used to drive the world economy, that's not the case anymore. Shifting gears, LIBOR, which is the London interbank rate that the banks in Europe charge each other to lend to each other, is rising. It's not at a crisis level yet, but again, it really spiked up in 2008 for that financial crisis, and it's now starting to rise again. So again, possibly a dangerous sign. You probably heard Goldman and some of the other Wall Street banks made money every single day in the first quarter of this year. And so, you know, on one hand, that's kind of amazing. On the other hand, something that's interesting, Goldman also puts out their top trades of the year. The 9 top trades that they put out for their clients at the beginning of the year all lost money. So if you're Goldman's client, you lost money. If you're Goldman, you made money every year. Satyjit, an Australian money manager, said, if you're surprised Goldman made $3.3 billion in the first quarter, that doesn't make any sense. He said the government is giving these banks free money. They're lending them it practically free so that they can turn around and lend it back to the government. It's another way the government's able to basically print its own money and make a profit on that. But he said with Goldman's $1 trillion of assets, they should have made $7.5 billion. So really, other than this free money-making scheme that the government's giving them, they're losing money. So again, a dangerous sign. The bank's books are not nearly as healthy as they report them based on the mark-to-market rules that the government passed a couple years ago. There are $10 billion in distressed mortgages offered for sale since March 31st. So this is more than the last several years combined. So banks are finally unloading the just junk that they have on their books. And again, that's kind of a scary sign. It means look out below for banks as well as real estate. You know, my guess is banks have finally decided they can't hold out any longer. They've got to get rid of this junk, which means they're in trouble, and the real estate market's in trouble with all this stuff flooding onto the market because prices are going to drop significantly. And matter of fact, they already have, of course. Residential median home prices down 9.5% year over year. Retail commercial down 19%, office prices down 7.2%, office vacancies rose to 17%, and rents fell 0.8%. Commercial prices fell 25% year over year in the first quarter. Seth Klarman, a brilliant money manager, sees a lost decade upcoming for stocks. He called the financial markets a Twinkie and said there's nothing natural about them. The government is manipulating every market. It's a difficult environment to be an investor in. U.S. stocks are officially now in a correction. I'm sure you've noticed the stock market is down. We've been talking about it for a while. I tried to predict it. I was early. I thought it would happen in March. It started happening in April. And let's see, we've broken all the resistance levels. Interesting thing, if you price the major stock markets in gold, over the last 8.5 years, the S&P, they're all, just about all of them down. The S&P is down 78%, Australian market down 70%, UK down 77%, China down 63%. There are a couple that are up, Brazil up 2%, India up 20%. So it gives you an idea with the government printing as much money as they have. Sometimes it looks in dollar figures like the market's going up. In real terms, they're all down very badly. Your real wealth has been eroded very, very badly. An interesting thing, for a while there, stocks in the dollar were negatively correlated. If one went up, the other went down. That's not been the case recently. And David Rosenberg came out and he said he expects a 30 to 40% correction in the stock market starting now. We're at the top. And the reason for this is, he said, we haven't had a huge run-up so quickly as we have over the last year, year and a half, since the early 30s, after the, in the middle of the Great Depression. We had a couple even bigger quick run-ups, followed by, I think, a 34 and a 40% quick correction. So that's what he expects to see based on that this time. And June is historically a down month in the stock market. It looks like the stock market is crashing. If you don't really understand what you own and why you own it, you probably should get out of the stock market. Thanks for being a part of this video. I appreciate it. And we're going to jump to some more, so they'll be coming soon. Again, if you haven't seen the Coming Storm video, please, you can watch that for free at the link right by this video. Thanks, and God bless you.